Hey everybody, welcome to Mortgage Today for Friday, June 14th, 2024, and oh, what a day it was. So we get the full measure of the Fed reaction today. Coming in, we have the UMBS, which is pretty much flat as Fed week comes to a close. S&P futures were down 28 points in the morning. So I guess the money has to go somewhere. Investors sought haven assets amid deepening political turmoil in France, pushing European stocks towards the worst week in months and weakening U.S. equity futures. The Stoxx 600 fell 0.9%, extending losses since Monday to 2.3%, while France's CAC 40 erased its yearly gains. The S&P 500 and Nasdaq 100 are set to open lower after hitting record highs all week. After hitting record highs all week, the dollar strengthened. Bonds backtracked on a majority of the overnight gains in the first hour. Neither move was especially big, and trading levels remained in positive territory ahead of lender rate sheet print times. As such, this isn't too alarming, but it was a bit counterintuitive given the lower inflation implications associated with the import-export price data. The simplest conclusion is that data isn't the driver. The quick look at the clock and volume suggests that traders were lined up at the 620 CME Open to square up some long positions heading into the weekend. There's also some chance that the Fed's Mester's comments had an impact, but on balance, they seem more bullish than bearish for bonds. She basically said that their actions are doing something. Inflation is moving down, but need a couple more reports to believe it. Import prices came in at negative 0.6 on a flat forecast. It was 0.6 previously, so coming down quite a bit. Export prices came in negative 0.4 on a 0.1 forecast. It was 0.9 previously. Shelter inflation remains the biggest component of inflation, and the best way to solve that problem is new construction. It looks like input prices into residential construction have began to stabilize, although we still are well above pre-pandemic levels. After the Fed meeting and a couple of benign inflation reports, the Fed fund futures are now settling in at 2 rate cuts this year. I don't know where they come up with that. Despite the stronger than expected economic data, the yield curve remains highly inverted, where it has been for the past 18 months. This is a classic case of the inverted yield curve predicting 12 of the last 7 recessions. The notion that MBS underperforming treasuries is front and center today, not because that underperformance is especially large, but mainly because MBS are often in the red while treasuries are in the green. We have nothing new to add to yesterday's similar discussion of MBS underperformance, but have nonetheless attempted to add a few thoughts in today's closing. We have nothing new to add to yesterday's similar discussion on UMBS underperformance. It was a boring day for bonds and modest gains for the long end of the yield curve. One major reason for MBS underperformance and the uneventful sideways grind in the afternoon. UMBS closed the day down 5 basis points at 100.72. The 10-year Treasury is holding right around that 4.22 level, but at the 100.72, right in that same range right there where we keep trying to test that Fibonacci line at 100.872 and failing and bouncing back down. So hopefully we get some bad news next week and push us up into that. In terms of news coming next week, at the start of the week, we have Fed Cook speaking, 42-day bill auction, Harker speaks. We got a lot of Fed talk next week. Tuesday, we get retail sales that can move the market, as well as Barkin speaking. We also have a 20-year bond auction and a bunch of Fed speakers there on Tuesday. Wednesday, the markets are closed. And then on Thursday, we get jobless claims and some more Fed talk. And on Friday, S&P Global Manufacturing PMI, Services PMI, and Composite PMIs. So let's talk about things you can control, which is your brain and the information you put into it. So over the weekend, definitely check out some information from our sponsors, including WellThatMakesSense.com, which has a great video series on how to make offers worth $100 million, and a bunch of other stuff from our common sources and influences.